What's up, everybody? Welcome to our Gold Rush Weekly Watch List. This is your friend Huey212. So I'm gonna go ahead and go through this list real quick. I don't have many, but what I'm gonna do is go through some interesting setups, and then I'm going to, since we have a big earnings week this week, right? This is earnings season with some of the biggest names reporting this week. Some of those names being, let's see, who's reporting this week? The heavy hitters. So on Monday we have Bank of America, Charles Schwab, Synchrony, Goldman Sachs. Goldman Sachs is gonna be a massive one. Let's see. Tuesday we have Johnson Johnson. We have Netflix. We have who's that? Lockheed Martin. Right. On Wednesday, we have ASML, we have the Nasdaq, we have Tesla, United, we have Alcoa, right? All names that we've played in the past, right? All names that we're familiar with. On Thursday, we have AT&T, we have Snap, we have Domino's, which does pretty well usually. We have Nokia. And on Friday, we have Verizon, Amex, and Twitter. Twitter's going to be an interesting one. I think Twitter's definitely on the list to look at. They're going to be an interesting one based on all of the chaos surrounding them right now, right? We also have Cleveland-Cliffs on Friday. So we have a big earnings week. This is the beginning of earnings season. Between this week and next week, we have really the big names that can really potentially move the market, right? Like Tesla's going to take the market in a certain direction. The banks are obviously going to take the market in a certain direction. I think that the banks are headed with more downside based on what we've seen. I think potentially that Synchrony is one that might benefit off of the downside move of banks and the state of the economy, because more people are borrowing at more favorable rates than the banks are lending at, which is like a buy now pay later kind of vibe, so Synchrony I think will do well. Netflix is going to speak heavily to the tech industry. I think for whatever reason, Netflix isn't really in the same space. They have subscribers, like they have a service that offers subscriptions to people to watch movies and films and shows, right? Whereas Apple sells products, Facebook sells ads and ad space, Google sells ads and collects data, right? So I don't understand why Netflix usually is the one that runs the show, but it is what it is. So those are the ones I'll be watching. So it's going to be an interesting week. So, all right, so I'm looking at SPY right now. I usually have my SPX chart, but SPX chart is kind of hard to see. So I'm going to go ahead and do SPY just to kind of set some quick levels. And really, I just wanted to highlight this kind of wedge that we're in right now. It takes a while to kind of notice it, but I'm happy that we're wedging right now, because that means that for now, at least we're in an area where we're kind of trying to decide where we're gonna go, whether up or down, right? And that's not to say that I'm bullish at this point, or that I think that we're done with the downtrend, right? This is currently a bear market. Just want to mark that box real quick. This is currently a bear market, and as you know, we are off the highs by about almost 17%, right? 16.69%. So let's see. So we're off the highs about 16%, currently in bear market territory. We have a lot more downside, I think, in my opinion. And the reason why I say that is because if I go out to the weekly chart, we still have the 200 weekly SMA sitting down here at around 350. We got this area where we can potentially test, like, this area where we're kind of chopped around those couple of weeks in the past, right? Currently we're in this chop. So you can see, we're just revisiting some of these areas where we didn't really know where SPY was going to go, right? So we have this area that we revisited in the past. And then we have this other area that we potentially can come down to kind of test, right? If we go to the monthly, I think for this part, I might pull my SPY chart out. My SPX chart. So if you see, this comes down and kind of tests near where the 50 monthly moving average is. And it came down, tested it here, and bounced. This was a COVID low, right? And so we're on that slow grind down, slower than anything that we've seen in the past few years, right? Even slower than like 2015, because this was kind of down up, right? Maybe the most comparable would be this one here, right? So it looks like we're ready to retest this moving average here, which puts us in the same spot on 350, right? I want to pull up my XPX chart so you can see where we're currently at. There's a massive channel that we've been trading in for a very long time. This is the monthly chart, and this is the low of 2009, March 2009, and so we've been kind of holding this channel. We came down to test it during the COVID lows, and then we came to breach the kind of the top of it, and now we're headed back towards the bottom of it, and that puts us around 34.79. If you're looking at the SPX, so just about, you know, 350, 348, 347, something like that, will put us at the bottom of this channel. And I had another chart. I guess maybe it's on my TOS or something, but basically the other chart shows that it's a little less steep, right? It's like, it might be like this. I'm just gonna draw it quick and dirty. It might be like this, and like that, right? And it basically shows that, I wish I could remove these lines, guys, but I use this every day. It basically shows that SPX is pulling back into the channel towards the center of the channel, right? So, you know, so that means that there's still a little bit more downside for the SPX. Let me just, this angle, I think this angle is a little too steep. Let me just get rid of it. Let me just fix this a little bit. It was more like this, right? But basically what it shows is that we pulled out, we shot out of the top of this channel, and now we're just working our way back to the bottom. That's why it's a nice slow grind. So I see more downside. This week is going to be a big catalyst on which direction we go, and whatever direction we go might be, unless it's down, it might be short-lived. I think that we need to really retest this area here. You know, as you can see, it's actually some chop here, but also previous resistance, and I think we just need to come back and test it one more time. So I think that's the direction that we're headed in. Now, let's see. Just one moment. All right, so now we're in this area of chop. We're at the top of the wedge. We're above the 9 EMA and we're above the 21 EMA. We have the 50 up here, but we have a lot of resistance. So I mean, again, I think that I'm gonna draw some technical levels on this, but I don't think that that we necessarily will abide by these levels. Only because, you know, this is the S&P, this is SPY, you know, this thing is news driven. If we have a bad day, if we have a high price, you know, anything that really is outside of technicals will affect this more than the technicals will. So, but you got some upside levels and downside levels. Obviously, if you're with us in Gold Rush Trading Academy, then you know that we watch the SPX and the ES pretty much all day. So, so I wouldn't really just focus much on this. I just wanted to point this wedge out. The price is getting tighter. Outside of this wedge, you know, the catalyst, unfortunately, we won't let this, it won't play out, because if we have a really good earnings with banks, the way that we did with JPM on Friday and Citibank on Friday, then this thing will break out. And if, for example, Netflix does bad or Tesla does bad, then we'll come down, right? So that's something I wanted to keep on watch. So pretty much in the same token, we have QQQ. QQQ has essentially the same wedge. QQQ is a little bit tighter, right? And it's a little bit cleaner, right? It's a little bit cleaner. The resistance line has been forming since, you know, way back in April. And I can probably even go further back if I just extend this and see there's a bunch of places where it probably touched, but the resistance line has been formed since at least April, and these lows are getting higher and these highs are getting lower in a very clean way. The 9 and the 20, the 9 and the 21 are underneath price, and price is getting ready to test the 50, right? And the 50 is at the top of that, right where that falling resistance line is. So I have a feeling that, you know, sometimes the technicals lead the chart and tell you kind of what direction things are going to go, especially with catalysts involved. So I would say that it's potential for QQQ to come up and, you know, make one nice day, and then maybe some bad news comes out, maybe, right? As you can tell, I'm very bearish at this time. But I'm watching out for the 50-day right there. If we're gonna set some levels, you know, we don't really play the Qs too often. QQQ is a good ticker to play if you want to play earnings. Obviously, I'm not gonna mark it, but the 50 days probably where that blue line is gonna be right there by tomorrow. If you want to play earnings, right, then and you want to minimize your exposure to earnings, meaning you don't want to get killed by IV and you want to play more than one name, whatever the case is, then you could just do QQQ for some of these swings, right? Tesla, Apple, obviously, Netflix, ASML, I think has a decent size holding in QQQ. So you would use basically these ETFs to minimize your exposure. If you think that Tesla's gonna beat, play QQQ calls. If you think that, you know, Alcoa is gonna go down, play XLI puts, right? Like just things like that, just so you can minimize your exposure. And if you're brave and you're really brave and you maybe have profits that you want to play with, and go ahead and swing through with the actual names that are reporting, right? If that's on you. But I like the wedge. I think that if we can break out and really take out the 50 is going to be really, I mean, it looks like a magnet at this point, but above that is where things are going to get interesting, because now we're going to have, you know, we have the higher lows, the lower highs. That'll be our first, you know, breakout above this with a big strong candle. It'll put us back in this area, right in this area here. Right, so it'll give us like higher lows with pretty much equal highs once we get up there. So and that'll be really interesting, because above this line we have a little gap right here, and then from there we get back into this next zone that we were in the past. So so I like it. I mean, technically the chart looks really nice. Does that mean anything? No, just because of all of what's going on this week, right? So I have a quick and dirty list. So Shop has earnings in 2 weeks on August 1st, and they're forming a really tight wedge. As you can see, price was all the way up here at 1600 just a little while back, right? Just a few months back. And I think Shopify split as well. Yeah, they did a stock split, a 10 for 1 stock split. So now they're down here at about $30. You know, but it moves. It still moves. It still makes moves, right? So people were scared that the splits are gonna mess these things up, but they still make moves. So just see something here. Yeah. Okay. So I like the wedge. It's at the bottom. It's sitting at support. It put in kind of a hammer. I just want to look at the volume real quick to make sure that there's some volume in this. You always gotta look at volume. You can't just if you're not trading with volume on, then it's really, you're just looking at vibes, right? Volume tells you the real story of what's going on. So decent volume, less than average, but it's been less than average for quite some time. I think all the volume came in right before the split, right? You can see all this volume just rising up into the split. So I think that the volume is decent, right? It's not terrible. Let's go ahead and just do another one right there. I can probably get rid of this one actually. So I like it. I like Shop. I like that it's figuring out where it wants to go, right? This is price discovery. All of this is all price discovery. And now it's going to make, it looks like it's making a decision. So now this can easily form a, like, I can kind of see like a shoulder here with a head here with another shoulder there, right? But this can easily just go up. It doesn't have to play out. You know, we draw these patterns so they can kind of help us to determine whether we think things look like they're bearish or bullish, but it can easily just change its mind and invalidate whatever it was that we thought that it was going to go. So I see a potential head and shoulders there, right? Shoulder, head, shoulder, which is a bearish signal. Your neckline is pretty much at this support line. Break this support line. I'll give you a measured move real quick to the downside. So Shopify is in a business of e-commerce. Basically, you set up a store with Shopify and you can sell your products on their store, and they give you specialized tools and I think some advertising and things like that. So Think about where we are in the world and where the economy is and where inflation is and all these things that you hear in the news and all these things that affect the market and more importantly that affect real people's lives, and think about whether people are going to spend money on items on Shopify, which I would consider luxury items, you know, because anything that I need, I can go down the block into the grocery store and get, or I can go to Costco or BJ's and get, right? I'm not really shopping on someone's boutique for satin do-rags or whatever the case is right now, right? You know, so I mean, it depends on your lifestyle, depends on who you are, depends on but just give it thought beyond your life, give it thought to like what other people in the world are experiencing, because you're not the only customer on Shopify, right? So anyway, break of that Head and Shoulders will give us a price target of about $20.50, $20.50, right? And then we also have put it, yeah, that's fine, put it there, 20.50, right? And then we also have kind of a cup, you know, kind of a double bottom, triple bottom. I mean, I'm not in love with the setup to the upside, really, just because we're just hugging this downtrend line, and we have this big. If you look over here, we have this big volume profile that pushed us down a bunch, right? Pushes down on these days, it just keeps us down. So really, the first area where I think that we need to take out would be, in order to get bullish, would be here, and then here, right? And I like to use volume profile as that's where your supply and demand is, right? That's where your supply and demand is. You go to the intradays and you'll see that there's a lot of action in that area, and then price moves swiftly from that area. So just pull this back so we can see it a little bit clearer. Oops. Right. My lines are way over here. Yeah, okay. So you see like this area right here, you see how quickly, if you just look over to where the chart on the chart, where the ticker is, where the price is, where that right shoulder is, you see how drastically price moved down from this area, right? So that's a clear supply zone. And then if you look at the bottom one, just look over, I'm looking over to the left. I mean, this area has served as, I'm looking at it and it looks like it served as demand, right? Over here, prices moved up rapidly from this area. Over here, prices moved up rapidly from this area. Over here, prices moved up rapidly from this area. But also, it served as resistance on this time frame here, right here, and a little bit over here, right? So these are clear areas that it's at 33. These are areas that are of very strong interest. 33, and this one's 36.31. 36.31. Right, these are the areas that I'll be watching for Shopify if we want to get bullish, you know, and if we're gonna fall, then I'll be targeting that $10 move to the downside. I don't know if it's gonna be in one day, obviously, but I mean, look at all this consolidation. All the consolidation can lend itself to a big move, like such as this day where we had let's see, from a low of 64 to a high of 78. Right, that's a $14 day, right? So all this consolidation could lead to something like that, or even like this entire move of these 4 days, right? So I like it to the downside. If we do want to get upside, we're gonna break above this 33.16 and this 36.31, and then from there we could test the top of the head, and then from there we can kind of work our way to the top of the pennant, right? So we have those two. We have this level, which there's a lot of resistance at this level, just looking at the chart, and then we have. I will call it this level here, and then we have the top, right? And then beneath that, I would say just 30, 20, you know, maybe play $2, 30, 26, 28, 26, 24, 20 to the downside, right? I'm not gonna draw it because it'll convolute the chart, but yeah, I like Shopify. I like what it's doing in this pattern right now. The next one that I have is Neo. This is the second time that Neo's made my list. Second time. I think we covered Neo last week, and it's on this list now because the cup and handle that I drew out, I noticed that more people online are catching wind of this cup and handle, and what that tells me is that there's a potential for people to buy it based on the fact that it's kind of, you know, there's some buyers that stepped in over here on Friday, more volume than the previous day, positive earnings, and we're just holding this area. We're holding that gray line, this area right here where there's a volume profile. You know, the next area will be right here. So let me go ahead and just draw that. let's see. And then we also have Neo Day coming up in a couple of weeks. Usually the end of the month is when they report. So it has to hold these two levels. End of the month is when they report their monthly sales, and I called it Neo Day. Neo Day is not till January. Yeah, end of month sales report for all the car manufacturers: Tesla, Neo, XPEV, Ford, GM. All of them report at the end of the month. And the beginning, you know, like whatever the last day or the first day of the month, depending on what day it falls. For GDP purposes and growth purposes. What up, Toast? So this is the second time this is on my list. I think that now that everyone in the market is chattering about this cup and handle, so I think that it's going to play out. Obviously you have my super bullish price target. You know, this is like a year from now, $35 based on the measure move from this top of this resistance and supply zone down to the bottom of the cup. Puts us break of this supply zone up to the top of this price target. So I like Neo. I have a feeling if I look at the chains that they'll show us that people are buying, and especially with this, all the buyers that kind of step in this area. Let's see. I just want to switch my indicator set to the MAs. I gotta change this up. Just add I have the 50. I have the 50. I have the 200. So price is right between the 50 and the 200. And then I just want to get rid of some of these. Let's see. Let's see. And then price is just at the 21. So it really depends on what we do these next couple of days. If price can reclaim the 21-day moving average, which is currently at 21 days currently at 20.99, and the 9 days at 21.23. So really we need to get above that 21 day and not let the 9 push us back down before we can get bullish. Again, 2180 is where the volume profile is, so that's what we want to take out. And then above that we have let me just draw them out so we can see it. So we have 2180, we have 2328, we have the original entry at 2443 or 2444, and then from there we can start to work our way up to this 200. 200 is going to be a crucial level. I got to get rid of all these other ones, so I'm just do it now. So these previous intraday levels that probably will come into play, but I'm not watching Neo like that. Neo's one of those that I'm probably gonna just buy some time on and call it a day. Probably buy some Septembers or something and call it a day. Depending on how they report in August. But yeah, I like this. And then to the downside, because you want to always be mentally hedged and never have a bias, break this right here. It'll put us about here. A nice big drop. I mean, yeah, I would call it that. I wouldn't even call it anything else. Break this volume profile, break the low of day. I would take it. I wouldn't even take it at the break of the volume profile. I would take it at the break of low of day. So right, break the low of day, and then I mean there's a potential for it to kind of hold up in this 1972 area, maybe. But beyond that, I think if we break, we're gonna touch the 50, which is down here at 1869. So that's what I'm looking for with Neo. The next one that I have is actually the last one that I have, and then I want to just go through. I'm going to end up picking up just a few tickers from earnings. Is the VIX. So the reason why I like the VIX, and my boy Metamo put me onto this particular setup. So we have a demand zone over here, where price came down and kind of formed indecision for a few, whatever this is, 30 minutes, the full day, or the 30 minutes, or 1 hour or 2 hours, whatever it was. And then it massively moved up out of this demand zone. And then it came down, right? Falling wedge. And then it found a new demand zone, a new area where buyers stepped in, and then made a massive move up out of that small new area, right? You can see right here where it kind of based. And then it just made a massive move. Actually smaller than that. It's there. And now price is right back in at that demand zone. It's sitting right at that demand zone again. And Uh, so not only does it have the demand zone, but it has a 200-day moving average right here, right? 200-day moving average. Is this 200? Yeah, 200-day moving average. And we have this demand zone. So what that means is if the VIX followed a technical setup, then I would say that we would potentially bounce here. We would potentially start forming a reversal candle right on this level here, and then start working our way back up based on what I see here, right? And you can see there's a little bit of wick here. Let me go to the 30 minutes, see what they did at the end of the day. Yeah, I mean, it fell down, it popped a little bit, and then it came down. So a little bit of indecision here, but you can tell by the pop that there's some buyers there. So I like it to potentially either bounce. So the VIX is the volatility index for the S&P, and so as volatility gets elevated, the VIX gets elevated, right? As fear and uncertainty increases, so does the VIX. So with this strong earnings week that we have, especially with Netflix, Tesla, Goldman Sachs, Bank of America, who else? I mean, those are the biggest ones, right? United, maybe ASML, some of these big Snapchat, Twitter, with some of these big names, as well as the big names such as Apple, Facebook, Google reporting next week. There's uncertainty, especially with Netflix and all the layoffs, Microsoft's layoffs, and then just all this inflation stuff. It's there's plenty of uncertainty in the market, which might cause this. It might be reflected in, obviously it'll be reflected in implied volatility of your options contracts, but it might also reflect itself in the price of the VIX, right? As uncertainty increases, this might move up. So this is a good week for uncertainty based on all of the earnings that we have. If one of these companies reports, like let's say, for whatever reason, JP Morgan and Citibank reported not so great, but I guess they had really strong guidance. And from there, they just made a massive move up on Friday, right? JP Morgan, big green candle, and Citibank, big, massive green candle above a bunch of resistance and into a previous zone. So that's nice. So if Goldman Sachs which is pre-market, and Bank of America, which is also pre-market, put in some numbers or put in a result or reaction such as those other banks did, then there's a potential, especially Goldman Sachs, then there's a potential for this thing to break down through the demand zone, through the 200, and into this potentially next demand zone, right? So now with that breakdown, we'll have a nice gap up. That breakdown, we haven't been under 24 in a long time, right? The last time we were under 24 was back here in April, right? Back here. So underneath this, and we get gappy, and if for whatever reason they report a little bit of uncertainty, I mean, it gives investors a good besides the fact that this thing is sitting at support, and and then we have a big earnings this week, it's just, I think, a really good catalyst for them to say, nope, I don't like it, sell it, and then they sell it, and then this goes up, right? They sell banks, and then this goes up. So I think this is a very important setup for this week. And again, this is another one that, just like S&P, SPY, SPX, and also QQQ at this moment, they're not really going to follow the technicals. I think that they're going to, they're going to go where the market wants to take them. They're going to go where the results go. If the market likes what the banks do, then SPY goes up. I bet QQQ goes flat if the banks go up. And we'll be waiting on IBM. We'll be waiting on Netflix. We'll be waiting on ASML, Tesla, the airlines, right? So those are going to drive the market this week, in my opinion. There's no technical setup. These look nice, but there's no technical setup. Let's see. So now I'm going to go through, let's look at the banks real quick. I mean, they report on Monday morning, and so there's not much that we can do in terms of getting into a play. However, I'll say that if for whatever reason, they come and they interact with our levels, and maybe they'll give us an entry. So obviously we want to hold the high of day. The next level above that, I would say, is definitely right here, right? Definitely right there. And then, so those are two levels that really need to get taken out for us to get bullish. And then a lot of people were saying that SPY is gonna have a bullish week, but I think people are just high on hope. I don't think that's truly gonna happen, but we'll see. I don't like to predict the market anymore because it never goes in your favor. And then probably here, and then yeah, that's it. Those are my few lines. Maybe there's one right here. Maybe there's one right there. Right. So, and this thing has a range of. It has a range of about $1 and change on some days. Let's see. Yeah, dollar and $1.50 or whatever. So $1.50. So I mean, $1.50 from 32.64 gives us about 34. So I mean, we can put in another candle like this and take all of this out. You know, we got the 50-day right here. That looks like it might be a target if we can get really bullish. And really, it depends on where this thing opens. I'm drawing all these lines and it might open all the way up here. It might open all the way down here. So it's really, you know, it's really tough to do that, to abide by some of this stuff, due to earnings and massive price movement that's going to come out of it. So, the last earnings, they did well. The last bunch of earnings, they did well since last year, January. So, but it's been in a downtrend still. So I don't know. So we'll see. I mean, what I like about it is just like with Shop and just like with what's the other one? With SPY, right? SPY was kind of going sideways in his box. Same thing with the Q's going kind of sideways in his box. Shop, everything is building this kind of base, right? Even though some of this is still downtrending, but everything is kind of building this base. So banks look like they're building, or Bank of America specifically looks like it's building this kind of base, this box that is trading it. And so what that means is we can get a pop out of this, or we can get a big drop out of it. Regardless, whatever it is, we're gonna do our best to catch it, right? The next one is Goldman Sachs, which I think is a heavy hitter and weighs heavily on the market. It has pretty much exactly the same setup. This actually looks just like the SPY chart. Right, we got that. And we have that. You know, I don't like this ticker because I think that it's too costly for what it is. I like to, for that, I'd rather spend my money playing Apple or something. But those are your upside targets. The 50 days, the magnet. It hasn't held the 21-day, so it would have to take out the 21-day in order to get bullish, in my opinion. I mean, it has to have good earnings to get bullish. Fuck the 21-day. It has to have good earnings, good reaction to earnings, rather. Those are your levels right there for Goldman Sachs. Let's see, IBM. I think I played IBM once. I don't really like it. I mean, it has a decent setup, but when was the last time I played IBM? Let's see if we can find it on the chart. I'd probably never even used it on TradingView. All right, so IBM, obviously it looks like it has a massive inverse head and shoulders on a weekly, right? Shoulders, head, shoulders over here. That long-term chart's pretty crazy too, because we have this massive trendy move sideways, come down, and then kind of chop its way, making higher highs and higher lows. And now we're kind of in this downward channel, but it looks like we're at the top of the channel now, and we're going to test the top of it. And this is on the we're already kind of at the top of it, right? It's a weekly. Let me go back to the daily. Yeah, I mean, we're sitting at pretty much at the top of that channel and consolidating and forming higher lows into the top of the channel. We're you know, and that was you saw how fast I did that. This is probably not the best and most accurate, but basically, like, we're at the top of a range that it's been kind of trading in, forming higher lows and getting tighter up here, right? A bunch of sellers up here, but even with the one massive 2, 3, 4 times that it's sold off, on this 4th time it was kind of weak, which means that the supply might be weak. So, you know, and they report on the on Monday afternoon, Monday aftermarket. So, so there's a potential for a nice play here. This thing moves pretty nicely too. Actually, it has this day had a range of about $3. $3.20. This day, these big rangy days, this day has a range of $7, 6 and change. So we can get nice moves out of this. Let's see. I would say I didn't want to draw that there. I wanted to draw that where the 9 is. So there's a spot where it looks like the 9 and the 21 are gonna meet tomorrow, right here. And then low of day, and then the 50 is gonna be like right there. Those are your targets, and then right about here or so. 136.07, right? 136.07. So draw 03, 04, 7. Okay. So yeah, that's IBM. I mean, it has a nice setup, lower highs, higher lows. I don't know if the premiums, I don't know how the premiums look. So let me just, let me see. Let's see. I'm gonna open up my TOS, see what it tells us. I should open up my phone. Let me see. Let's see what IBM premiums look like real quick. If you have anything you want to look at, just let me know. Let me know in the trade floor or in the I think the hotline has its own chat, so you can let me know there if you want. Anywhere you want, let me know if you want something, want to look at something. IBM, the weeklies at this point, it has a an $8 market maker move, $8 expected move based on Thinkorswim. And if it were to break to the upside, I'd probably play the 142s. The 142s they have a bid and ask of $3 and $3.20, and they have an open interest of 442 and a volume of 425. The 143s are between 248 and 276 on the bid ask, so about 250 something, 258 ish, or 260, and the has a trading volume of 1595 with an open interest of 1061. That's the 143 calls for Friday, right? I'm not gonna go further out. I think I'm just gonna keep it there because I'm not really interested in playing this ticker much, although I like the setup. On the put side, I probably play the 135s because it's a nice round number, and I would probably play it into like 137.56, right? So the 135s have a bid ask of 223 to 235, so about 228 would be your market on that. And the volume, there was a trading volume of 333 contracts with an open interest of 1897. So not bad. I mean, it's not the most, not what we're used to, but it's not bad, right? I think that's why I stay away from this ticker, because I'm used to like 1,000 and 1,000 minimum on both, right? But it's not bad. And if you have patience and you got a nice fill and you got a nice entry, then you can make a lot of money on this. And I think this is a really beautiful setup, personally. And this is one that might drive some results in the market. So let's just keep our eyes on it. I think that we should just know how these things report more than anything else, just so that we are aware, right? Let's see. A couple other banks. Let's look at JNJ. JNJ reports on Tuesday morning. JNJ hasn't really been moving the way that like Moderna has, or even Novavax. But one thing that's interesting about JNJ is it has sort of a broadening formation. So I'm just gonna kind of see it here playing out, and then kind of see it there. I'm not gonna do, there's one that's like here, but I'm not gonna do it because I don't like when they're too aggressive, right? There's like this one, but this is too, I think this is too aggressive, because then this puts us like back. This is like, I think that JNJ, I think most of these companies have lost most of what they're gonna lose. I'm gonna put it here for now so I can zoom out and see. I mean, well, this thing hasn't really pulled back the way the rest of the market has. So that's interesting. I don't know if it's gonna come down. I don't think it's gonna come all the way down here. I mean, if it hasn't by this point, I don't think it will. So I'm just gonna get rid of this. unless there's something that's going to make it come back and retest this level here. But I don't see it. I don't see it. If it would have happened, it would have happened already. Right? I don't see it though. I don't see it personally. I see us discovering price in between this upper limit and this lower limit. I see that price is currently above all three of the moving averages, and they're consolidated. The 50 looks like it's about to turn around. And I'm never like when I'm on the mic or on the phone or something, and I hear like a million fire trucks and ambulances and cop. Like I need my coffee before I can deal with shit like that, bro. It's so annoying. All right, so we have this line right here, which is a very, very, very hard resistance to break through. But it looks like it's going in the right direction. If it wants to try and break it, let me see what that intraday looked like with the interaction with that line. Yeah, it came up to the line at the open, right? So it wasn't the end of day reaction. It came up at the open and then worked its way back up. So I think this is, I mean, the fact that it didn't die down the way that it has every single time that it's come back to this level, it came down and then the moving average held it up. So I think that's a really strong sign for JNJ. I think that break above this 178.60, we can see 180 pretty quickly because it's a magnetic, a psych number. 180, do I have a mag? No, okay. 180. Right there. And then above 180, I see a level here at 180, 124. I see a level here. And then we'll just keep the top of the range at that point. Right? We'll just keep the top of the range. Below the moving averages, I think we can come back to test this previous resistance, previous support, previous resistance. Underneath that, wick. Underneath that, I see a bunch of price along this line right here. Just if you look to the left, you see it at support here, resistance over here, support, resistance, resistance, resistance. So a lot of action on this 172.83 or 172.79-ish, and then from there we got the 200. And again, with earnings, this might not wake up here and work its way up or down. It might open up here and gap down. It might open down here and gap up. It really depends. It really depends on the market reaction. So just keep that in mind. Let's see. The next one that I want to go through is Netflix. DYT posted some news on the trade floor regarding Netflix yesterday. Let me just read it real quick. She said, Netflix said it expects to report a loss of 2 million subscribers for the second quarter after announcing an unexpected first quarter subscriber loss of 200,000 users in April. So they're going to lose way more than they initially lost in the first quarter. That's a lot. That's a big loss. That's a big loss for Netflix. I have some levels on Netflix already. That's a really big loss. I wonder how many subscribers they have in general. Let's see. Netflix current total subscribers. 74.6 million. So how the hell? So, wow. I mean, let's see. Yeah, okay, that makes more sense. Can I get global subscribers? Netflix subscriber count as of 2022 is 221 million. So they're losing 10% of their subscribers. According to that piece of news. So that's a big loss for them, I think, in my opinion. 10% of their revenue is lost off rip, right? So we have this wedge, same wedge that SPY and QQQ is in. Here's a more recent kind of a little bit more accurate one for intraday and for the recent price action. We have higher lows forming on the daily, with the newest low having been formed this week on this day, on Wednesday. And then we had the breakout on Friday. We had some news on Thursday too, or Wednesday. Wednesday's news was they're partnering with Microsoft for their ad service. So they're gonna start running ads on Netflix, similar to what Roku does and what like Hulu does, right? So that was a big catalyst, and I figured there would be a reaction. I thought it would be the very next day, but it was Friday, so that's good. I think that they need to. It's gonna come down to their guidance, because losing 200 million subscribers is it's a big loss. But if they report strong guidance, like if they had that priced in and factored that in, then I mean April. So when they said that they lost a couple 100,000 in April, look at this gap down, right? Good results based on the revenue based on the earnings per share. Not so much the revenue. Revenue came down by 61 million, and that's a loss of 61 million with a loss of 200,000 subscribers. So now, a loss of I gotta get these numbers. I'm not getting these numbers right. I have to be. They lost 200,000 users in April, right, causing this loss of revenue, and now they're expecting to report a loss of 2 million subscribers, which is 10 times the amount that they lost in April. So are we going to see another big gap down the way, like another big one of these, right? I mean, so if we do, then that puts us at like 150 easily. That puts us at like 130 easily, right? I don't know. I don't know if the reaction is going to be the same. I mean, we expect it to be the same, but it might not be the same. This is already very low. Obviously this came off of its high of like, I think it was like 600 at one point. Let's see. Yeah, at the peak it was 705, or let's just go here. It was 700 at the peak. So, and now it's at 180. So, so Netflix, I don't know. One day, I don't know which way it's gonna go. That's a big loss. I expect it for the market to have the same reaction that it did the last time. To be honest with you, like, I think that maybe we break through all these levels. I don't even think that these levels are gonna come into play. I'm not even gonna draw them. You know, I think we can be at 150 pretty easily. Based on the news. I don't know. And I think that if so, now what I've been noticing is if we have a massive gap down in the morning, like let's say Netflix comes all the way down here to 150 based on the loss of 2 million subscribers, then we'll have that gap down, and then buyers will step in at the market open because it's such a good price based on where it's at. It's such a good price, and people just buy it up. If it for whatever reason opens up, I think we'll have the gap down. So we'll just play the opposite of it. So Netflix is definitely one on the radar. Especially for a catalyst, especially as a catalyst for the rest of the market. I just don't know which direction it's going to go in, and so we just have to play the way we see it. That 200 million is a massive, or 2 million or whatever it is a massive bad news for them. So I mean, this might get smacked down tomorrow. So we'll see. We'll just see where it opens at. I'll put some levels. Actually, let's put some intraday levels. So I'm not trying to scramble at 9 a.m. Let's see. Pivot there. Pivot. Box. Resistance. Support. It really has to undo all of Friday's price action in order for me to get bearish. Go back to the daily. I'm gonna get rid of some of these. I'm gonna move some of these lines down. It really has to undo a lot of Friday's price action. Get rid of those. I'll keep that bottom one. Yeah, that's it. We'll see where it goes when it opens. The next one is, I just want to do one per. Let's see, ASML. Chip manufacturers. Oh, it's a holding company for chips. Interesting. Higher low on a daily. Right, higher low on a daily. Break out of resistance. Let's see. higher low on a daily, right? Low, higher low, breakout of resistance. And this is a pretty expensive stock, but it moves. I never really like playing the super expensive ones, but like this little tiny candle here has a low of 460 and a high of 475. That's a $15 move in one day on a very small candle, right? This little tiny candle here has a low of 488 and a high of 497. That's a $9 move, right? So very, very small candles, but massive moves. You just have to get the direction right on these, because if you get chopped up, it's gonna suck. So let me just look at the 500 calls for this. Again, they report earnings on Wednesday before they open, so this will be like a Monday, Tuesday play. And ASML 500 call is probably doesn't have that much OI in volume. Let's see. Yeah. 500 call. The volume 13, open interest 21. And the spreads based on that obviously going to be very wide. The bid is 460 and the ask is 570. So we'll be watching ASML for a reaction for the market. I'm not playing this. I'm not going to subject anyone to this pain. So I think some more upside. If it does make some upside, then that means that we get some nice move in that sector. That's AMD, that's MU, TSM, Nvidia, right? So I'll be watching ASML, just going back and forth to it, and I'll obviously watching the results. The next one is, before we do Tesla, I want to do UAL. So UAL has kind of an inverse head and shoulders forming on a daily. Airlines had a nice day. They had a nice week actually, right? Inverse head and shoulders forming on a daily. We have some higher lows with the head and the shoulder. We are getting really, really tight at this resistance level here. Above that, we have this. And then above that, we have this, right? So I like that to the upside. It looks like it just wants to really push to the upside. Prices held the 9 and the 21 on Friday's price action when it fell all the way down and then worked its way back up. Let's look at the way that it opened. Yeah, I mean, every time it came back to this level, it kind of fell down, right? Did it here, fell down, came back up, fell down, and then worked its way back up. Very bullish. Excuse me. So I like it a lot to the upside. I will play the 40 calls for this Friday. UAL 40 calls. UAL, that's if you want to expose yourself to some earnings. UAL 40 calls for this Friday. UAL has a market maker move of $2.47. UAL 40 call is 109 on the bid and 117 on the ask. 37.88 volume and 36.45 open interest. So 40 call to the upside. If you want to play downside, I would probably play 38s. Play it just as close as you can. The 38 is they're both, the 38 and 38.50s are both really cheap. Even in the monies are pretty cheap, but 38s are $1.27 on the bid, $1.34 on the ask. So about $1.31, $1.30, depending on your patience level. 405 open interest with 1270 in volume. So let me just write that down. I'll play the 40 call or 38.5p for 722. I'm long. Leave myself a note there so that we can know what the hell's going on. And then we have the 50-day right here, so that's nice, right? Holding the two smaller moving averages above the resistance, break above that into the gap. The gap brings us straight to the 50. That 50 is a magnet, so I like it. I like it a lot. If you don't want to play UAL, you can play DAL. Not the best setup. Let's see, AAL, much better setup. Love had some bad news the other day, but still putting in a Love is strong. Look at that. Love is strong. Not even like a head and shoulders, just like just straight higher lows. Straight higher lows. Flag breakout above all the moving averages for the past few days. Even opened up below and went above on Wednesday, so very bullish move. And Love is already in the gap pretty much. So Love is very, very strong. Even with the bad news, wow, that's crazy. I forgot what the news was too. Let's see if we can find it. Hold on. Go to trade floor. News love. Oh, it was what was it? I don't know. I forgot what it was. I gotta look it up and see what it was. But anyway, even with bad, and I remember seeing the news and saying, "Wow, this is not good." And still, fucking Green Day. Go figure. So 39.92. Obviously, break of high of day 39.92, and then from there, 50-day. Break of the. I don't like the risk reward to the downside too much. I wouldn't play puts. I just wouldn't play puts on it because we have too much support here, previous resistance, current support. And we have the moving averages, so I don't like the setup to the downside. I like it much better to the upside. I would place my stop here. So my setup would look like this. It's not the best R. I can tell it's not the best risk reward, but it's like 1-to-1. A little over 1. So that would be my setup, but it's not the best. Break above the 50 with a good catalyst and they have earnings next week, right? So we can play the earnings run up, especially with UAL reporting this weekend, and really the beauty of this setup, right? But again, we don't know. So I like this setup a lot into next week. Actually, let me just mark it with whatever color that is. And then I'm gonna go ahead and write some notes. Let's write some notes. Great setup into next week earnings. Use UAL as potential catalyst. I'm gonna look at LUV trade tab to see if they have an expected move yet or not. They might based on UAL, but they might not. They do not have an expected move. They do not have an expected move. So I'll probably play 40 calls. Let's see. I want next week, July 29th expiration. The 40 calls, $1.22 on a bid, 134 on a ask. 53 contracts were traded on Friday, 1456 sitting open. So I like it. It's not the best, the biggest and best OI and volume, as you know that I like, but 729, 40 call, good bid ask, and cheap, not too much vol OI though. And if we look at this week, 40 call. If we look at this week, 40 call. We have 466 contracts were traded on Friday, 792 in volume. Bid ask 67 and 74. So very well priced. I'd go out for next week. I'm not messing around with weeklies. I'm not trying to play myself. And you know, especially with earnings next week, we can play it right into the earnings. It's the 28th, which is 11 days from today. So we have over a week, a full trading week that we can kind of play this. And really we have to be worried about what it does with UAL. So I like this a lot. Let me mark UAL on my chart, on my thing as well. Mark it in purple. So the next one, and I'm just gonna go through Tesla's the next one. I have like 2 more and then we'll call it. Tesla has the same kind of, I noticed it on the bottom, but I didn't notice it on the top until now. I'm just looking, it's very clear now. We have the same kind of wedge forming, same as QQQ, SPY, all that. So Tesla reports, the last time they reported positive earnings, let's see, the last report was 42% surprise to the upside on EPS, earnings per share, with a 887 million revenue surprise to the upside. So, and that was on April 20th. How funny is that? So they reported, and then the next day it opened up So this day it closed at 977. So it closed down here at 977. The next day it opened up at 1074. So 100-point move to the upside upon open, and then immediately gapped down and flushed, and then just died from there. So, you know, I think the everything was good about it. Everything about the report was good. Just the market wasn't supportive of Tesla going up, and Tesla is not weighted heavily enough in the SPX really to carry it the way that it did when it first joined the SPX. I like that all the moving averages are consolidated right now. I like that price is deciding between the 50-day and the 21 and the 9-day. It looks like there's kind of a cup and handle. It looks also like kind of the inverse head and shoulders. At the end of the day, it's just a wedge. You know, we'll let earnings earn, and then we'll just take the direction it goes. I can't, you know, there's no technical setup right now for Tesla. It's all about earnings at this point. Let's see, and then let's look at AA. AA has earnings. They're in steel. I think that prices are high for steel. I think that manufacturing is costly. I think the home builders haven't been. I think the output has decreased. The price has increased. The demand has decreased. So I don't think that home builders are. I don't think this is set up for a good quarter. What up, DYT? I don't think this is set up for a good quarter, personally. And this will be a good catalyst for X and for CLF. If it does beat and it gets above that 9-day moving average, which is at 43.50, then we can see 45.73. I mean, I have some old levels that are still at play, right? We can see 45.73, and then from there we can see 46.50 or so, where the 21 days at. And if it fails, then I think we can go down to maybe 38. But again, I'm not too pressed to rush into this for earnings. It does have there's nothing bullish about it. It's just forming lower highs and lower lows. So obviously clear down channel, downtrend within a down channel, right? Just draw it. I like to draw these things to remind myself that, you know, just to keep kind of perspective where it needs to be. I tend to lean bullish, and you don't need to all the time. You can make money both sides. So down channel, just draw it a little further back. Yeah. You know, again, earnings don't respect technical, so this could just continue to go down or up or sideways. It could do anything. So keep it in mind. I mean, I'll be watching it. I'm gonna watch every single result this week, because we either play something else, right? Like AA, we play CLF, we play X all the time. XLI, right? You know, ASML, we play AMD and MU, TSM all the time. So even if you don't have a position in any of these, you always have to just know what the market is doing. If you want to be successful as a trader, you just want to know what the market is doing. Take some time, digest the results, digest the reaction to the results, really is what I mean. And then, you know, just keep in the loop. You know, this community, we like to be well informed. We like to make sure that we kind of connect these dots so we can stay ahead of the moves if possible, and you know, constantly think about where the money's at for the future, not just for today, right? Not just for today. These things matter in the long term. So that's Thursday. Sorry, that's Wednesday. Let's look at Thursday. Thursday we have AT&T. I hate playing. I'm just gonna look at the chart though real quick. I mean, AT&T moves like 5 cents on its biggest day. So, you know, we have AAL, which again has a pretty decent setup. Has like kind of a high and tight vibe. Let me see. AAL has like kind of like one of these going on. And it's the same wedge as the rest of the market. So, and then it's in the gap, so that's nice. I mean, I'm not gonna put levels on it because I don't think that right now it's worth it. I mean, if you do want to play, let's say if you do want to swing something from Monday into Thursday, into Wednesday night rather, let's see, break of day high, close, and then we have that level, then we have the 50 right about there. and then break of the moving averages, which is the break of day low. This setup is, I think, it's probably better to the upside, but the risk reward is decent if you can get a nice break of this level here. I would move my, if this goes up, I would move my stop up to the open. If this goes down, I'll move my stop down to my entry. Keep it super tight. Keep it super tight to the downside. So let me see. That downside. So let's say we're playing calls, and we got the break of day high. Originally, once you enter, your stop should be kind of here. Play the 50. I mean, it's not the best, right? But play the 50-day as the level. Once we enter, we get a break. We hit that first level. Let's say we hit that first level at 1477. Move your stop to your entry. And now look at how crazy this risk reward gets. It goes insane, right? It goes insane. So, but you have to be disciplined. You have to be super, super disciplined. So what that means is you got to take yourself out of the trade once it comes back to retest high of day and form a candle underneath high of day of Friday. So you have to be very, very disciplined. Discipline is the name of the game here, right? So, but AAL is nice to the upside. Let's see the downside risk reward real quick. How you would play it. Short position. Entry at low of day. Keep your stop. Once you enter, keep your stop at the, I will keep it at the open. Just to give yourself a nice risk reward. And then I'll put it to the second target. We can come down here lower, but I think that, let's be realistic, we can probably do these first two targets in one candle. We'll do all two of these targets. This has a 1.74. As soon as you enter, it hits that first target, bring it down to your entry. Now you have an amazing risk reward, right? So that's, and I'm not saying you're gonna make 7,400%. I'm not saying you're gonna do some crazy play, but what I mean is you're protecting your downside and infinitely protecting your downside. So that's what we should be doing with every play. And if you're in one contract, if you're not scaling, you're just in one contract, excuse me, then and you see, and the thing costs you $40 to get in, and you are up, they're 30%, and that's only $12. Guess what? You're up 30%. Book it and put it in your pocket. And then now you're gonna have $52 to play with for the next contract, and then you're gonna have $60 to play with, and then $80 to play with, and then $100. And that's how you compound, not by trying to hit home runs all the time. 30%, book that shit, put it in your pocket, and build your account. Hit 100 plays with 30%, starting at $50, and see where you end up. And then once you can start scaling, then you can start having fun, right? You buy 2-3 contracts, and then you sell everything at 20% or 30%, keep one, and that one you let it go to 100. Do it again, and then you scale to 5-10 contracts, and then that one you're gonna let it go to 1,000, right? That's how you do it. It's the name of the game here. So AAL, very, very nice setup. I'm pretty bullish based on just the way that the whole sector looks. I think that all the news is surrounding airlines is really bad. But that being said, I don't think they care. I don't think investors care. I think people are gonna still buy it. I mean, this thing is at $14 right now. Off the high of, the most recent high was $21, and then before that we had a double top at 26. So this is a good price, And then even before that, we had a high of $58. So I mean, this is just a great price. Investors don't care. I don't think investors care about the news, as they've shown in the past. Too much with airlines. Let's see who else. I'm just looking at the list. I'm not gonna waste my time with Nokia. Just see what price Nokia is at actually. Yeah, nothing. Pennyland. Let's see Snap. Rest in peace to those Nokia leaps, huh? So Snap is still hasn't come to fill that gap. Was there another gap? Yeah, there's another gap. Yeah, it never came to fill. This is when I stopped playing Snap, right over here. I've been drawing on it, but this is the last time I think I played Snap. So, and now Snap is at $13. Snap is like damn near Pennyland also. So, let's see. I have a wedge, same wedge as the rest of the market. Same wedge, tighter, actually. So that's nice. Inverse head and shoulders forming on a daily. Right, we got the head down here, shoulder, elbow, right? Price needs to get above the 9 and the 21 and hold. Like, do what it did on these 2 days. Get above it and hold it and not fail. Once it does that, it can try to work its way into this gap where the 50 is. Underneath the 921, I wouldn't touch it. I mean, it looks like this rising support line is pretty strong. Maybe if you want to play puts, you can play it back down to the line, but it's pretty strong. I wouldn't even touch it. I wouldn't even waste the mental energy that it takes to stay in a play like this. You know, it just takes too much energy. So I'm not in love with it. I mean, maybe to the downside. Let's put some downside levels on this. Let's see. We got there. How are you? Good morning. How are you? Yeah, I know. I think I was thinking about like having to readjust this time, but I think maybe I'll just keep it at this time and people could go watch the recap. Okay. Mm-hmm. So for Snap, you have your levels. We're in the same wedges of market. I drew some upside levels, some downside levels. Snap, I think that, you know, with Snap, it really depends on where their ad service is going to take them, their ad revenue. And so, you know, it's really dependent on that. And there's not much more to be said about Snap. So I have just a couple of more tickers to discuss, and then that'll be it. Let's see. Back. So the next one that I have is reporting earnings. Is we have Capital One. Not really interested in it. Let's see, CLF reports on Friday. I like CLF to the upside. I like this kind of tweezer bottom forming here. Now, full disclosure, I am in some X calls for this coming week. So I think that you know, I mean, on some strat play, this is an inside bar right now, right? We're inside the range of the previous bar. So the next bar, either up or down, will be the one that it's actionable. This looks like it has full time frame continuity to the downside, meaning the strength is more bearish than bullish on CLF. However, that can turn around for a couple of days or a day or whatever the case, or a week or whatever the case is. So I'll be watching for a break of this previous day high of Thursday to retest the 9, which is there, and then to retest the top of the of Wednesday's candlestick for CLF. So and then we have that one. And to the downside, I mean, you know, at this point it would be $14.30, would be $14, and $13.70 for a downside. But I'm bullish. I like the tweeter bottom. I like the fact that they have, you know, and this is the same industry as AA. And again, I was saying AA might be a bit expensive. Technically speaking, I like the CLF chart. Let's see what X looks like. Yeah, X has kind of a similar setup. X is actually a little stronger because it's basing. It gapped down, came back up, and now it's back in this box. And looks like it wants to break high of day. Same thing inside day on X. So I like this X chart a lot, actually. And then this has much cleaner targets, upside and downside, right? Down break of that day, and we have here and here. And again, I'm bullish on X. I want to see 2 big green days to test this 21 day. And the last one for earnings that we'll discuss is Twitter. So we smacked Twitter on a swing from Wednesday to Friday. The Twitter play on Wednesday gave us some money, but I think there's more money for us in this market based on what we have. So Twitter has this kind of resistance line that's right there, and then it has these gaps, multiple gaps. So I want to see Twitter break high of day, break into this box, and then we can try to test some of these upper levels. The 50 is going to be right around here at, let's say, 39. I'll just call it the midway point between these two. That's going to be the 50-day moving average. So that's going to be a little tough level to break to the upside. And let me label that so we don't forget what it is. And then I'm gonna have my coffee after this. 50-day SMA should meet here. Price here. And then to the downside, we have a hard rejection of this resistance. Will bring us to just about this level here, 37.37, and then back down to this level here, 36.93-ish, right here, and then from there down here. So I like it more to the upside. I think the risk reward is set up better to the upside based on the low of Friday as well as the low of Thursday. It's pretty much at the same place. So you can set that as your stop for the upside trade. So you have entry there. You set your low here. And you could play to the 50. And you have a 1-to-1. Not the best, but it is what it is. Actually, if you're going to set your low here, then you want to set your high to maybe here. Maybe this pivot here. Which gives us, even still not the best, but you know, as this thing goes up, you move it up, you know, it gets profitable, it breaks up above this level, you move it up and just move it up. You keep moving your stops up and you get a better risk reward. And you have to, and this is a downside, no wonder. You just have to always, you know, protect your capital is the name of the game. People want to make money, but the first thing they need to do is protect their money, protect the money that they have at play. Right, so if you play to the 50, you have a 1-to-1. Play to the next target, you have off rip, you have a 1.34 to 1. Move your stops up, you have infinitely, it gets much better, right? So that's how you play it. And that's it. I don't think I have anything else. If there's anything else, I'll post it inside the trade floor. Sorry, the watch list channel. I have CLF, I have X. I'm just looking through, make sure that everything that I discussed gets posted inside of the watch list. I mean, we didn't have a lot to start with, but we definitely ended with a lot. So let's see, UAL. Okay, yeah, I haven't seen BX in a minute. BX has a nice little triple tap to the downside. Lower highs. Could be inverse head and shoulders depending on what it does with these moving averages. Okay, so that's it, guys. Let's look at DPZ real quick. DPZ usually, I think they'll be fine because they're pretty cheap product. Nice inverse head and shoulders, aka cup and handle. It looks like it wants to break out above this resistance level here. It already has a pivot there, and it has a pivot there, and it has a pivot there. So the upside plays nice. If we play downside, then I would take out the 9 SMA on a daily. And then I would take out the previous day, and then I would take out the previous day, which is a nice pivot point. And then from there, I would try to come out to where this 50 day is. But it looks very bullish to me based on the 21 crossing over the 50, is riding the 9 moving average. It's on the cup and handle or inverse head and shoulders, depending on how you see it. Really, it's just, it went down and it came back up. Very bullish. And we have some decent upside targets. The 432 is a very, very nice target because we'll meet the 200 day around that level. Downside, I don't see too much downside. Maybe a retest here and there, but I don't see too much downside based on, especially look at how it melted down on these 3 days. Melted down, took out, made new lows, and then bounced and bullish engulfing and made a new high to take out both of these highs on this day. And now it's making an even newer high, right? So above this, an even newer high. So very, very strong trend on Domino's. So Domino's is another one that looks pretty cool. Never made it on my list before, and it's on my list now. I bet you the chains aren't very liquid though, but we'll see. So that's it, guys. Thank you for rocking with us this Sunday. Thank you for watching this video if you're not here live. And every week we do this. Every Sunday we will do this this weekly watch list call. If you're in the server, we'll go ahead and take your request inside the watch list or trade floor, pretty much anywhere. If you post a ticker and it looks good, it'll make it on this call. And obviously you can ask us anytime for a free analysis. And if you want to try us out for 1 week free, gorushgang.net. GoRushGang.net, or you can just go to GoRush.memberful.com, whichever one you want. Let me just go to GoRushGang.net. That'll take you here. You click join us, and you get 1 free week if you subscribe. And your challenge after subscribing is to make back your $75 that you haven't been charged yet, and you'll make it back with us fairly easily. So that's it, guys. Thank you so much for joining and for being here, and I'll see you on the next one. Peace.